In Kenya, foreign investors pulled 23.9 billion Kenyan shillings out of the Nairobi Securities Exchange in 2022, the highest outflows in 2 years, as they took flight from the markets on heightened global risks. Moreover, the NSE issued a profit warning, saying it expects to record a decline of more than 25% in the net profit for the financial year ending 31st December 2022, as compared to that for the same period, which was 31st December 2021. Eric Mokaya, founder Mwango Capital, joined us earlier to unpack more.
So generally, the market was down. The NSE index, I think, was down 12%. The NSE 25 index was down 16%, and the all-share index was down around 23%. So the best performing stock prices at the NSE was Crown General, which was up at around 186%. NCBA, which was a bank, also up 64%. Olympia Capital, small farm, up around 43%. So the worst performing stocks were Safaricom, Centum, and Nairobi Business Ventures. All of them were down a bit, 30 to 37% in that region that last year. So I think generally the sentiment, my assessment is that the market was pretty hit last year, given that's a year when we had, so the market was trying to recover from Corona. The situation in Ukraine happened, and then we had an election last year also in Kenya. So a lot of, I would say, things which are not really good for the stock market happened last year. But our NSE index has not been performing, our NSE market has not been performing well for the last 4-5 years. So I think we can't really wholly blame it on the fact that global issues were happening and elections that were happening. So I think that's my general assessment of the market, at least last year, I would say.
We are obviously eagerly awaiting to see the final results for the year ended December 31st, which will be released around towards the end of March 2023. But we've just seen NSE has already issued a profit warning, saying that it's expected to record a decline of more than 25%. I mean, what should we expect from the numbers that they'll be sharing?
So I think profit warnings has become a bit of a problem on the NSE itself this past couple of years. So I think in 2022, we had around 13 listed firms issuing profit warnings, which is in contrast to around 10 in the previous year. I think it's becoming more common to see these profit warnings. So it's a bit surprising to see the NSE itself record a profit warning, given that I don't know which kind of what happened in the market. So waiting to see when they report the results, what could have triggered their profits to drop by more than 25% for them to issue a profit warning as such. But my bet is, I think last year, because of rising interest rates globally, what you saw is a lot of foreign investors exiting the market. That's why one of the share prices was pretty big, pretty hard hit was Safaricom. And because of that, then you find maybe activity at the NSE dropped significantly as a result. So maybe waiting to see and hear why the NSE itself has dropped in terms of profit for the year. But some of the things that the companies that have shown profit warnings for 2022, some of the issues that they're listing include things like reduced trading in equity and debt markets, at least for the NSE. You've seen issues to do with revaluation reserves for Ilham, higher risk claims for Liberty. You've seen issues to do with avocado production being lower globally for Kakuzi, increased raw materials costs for Standard Group, Flame Tree, and Crown Paint. So I think when you look all in all, you could sense that it's just the impact of global markets that is having on our local companies that may be triggering some of these profit warnings that they issued last year.
One of the best performing bosses, we're looking at the counter of Safaricom. We've seen a couple of things have just been happening. We saw the chairman for Safaricom has quit. We're also seeing that their entry into the Ethiopian market. Safaricom rules out the price war within the Ethiopian market. We're also looking at the different activities that are happening with also the increased taxes that are also kickstarts actually this week. So how will that really impact the activity for that particular Safaricom?
So I think for Safaricom, it's a bit of a challenging year, and they're going to have a couple of challenging years going forward. they're entering a new market. They're investing a lot. A lot of money is flowing towards capex. They've been unable, I think, to get more partners on board for the Safaricom, for the Ethiopian venture. If they're not going to engage in price war, that's kind of good, because then that means at least that they're able to maintain some of the margins that we've seen for the Ethio Telecom. So Ethio Telecom has around like 60% EBITDA margins. So I think Safaricom has around 50% in Kenya. So I think, like, if you look in that regard, if they're not going to engage in a price war, then they have to differentiate themselves in terms of maybe quality of service and all. If they differentiate themselves there and they're able to get the same margins as, say, Ethio Telecom is getting so far, then they're going to do well in Ethiopia. But the next couple of years look pretty intense for Safaricom. They have to focus in terms of being able, like, to set up on the ground, get themselves back up to speed, and be able to compete with an incumbent who's also quite adept at maybe maintaining them, or at least quite intent on maintaining their market share in Ethiopia. So a rough couple of years ahead, but I would say, I mean, Safaricom, if it was able to do it in Kenya, it can also be able to do it in Ethiopia. And of course, the situation in the country is a bit hard to read, especially in Ethiopia. They say they're open, but then if you go to the ground, it's used to do with dollar shortages and all. I don't know how Safaricom is going to navigate that in the next couple of years. So coming back to the issue of changing leadership, I think the chairman was only in office for around 5 years. 5 months, I mean. So I think it could be an issue of regime change in Kenya. Safaricom's biggest shareholder is the government, and I think the government tends to flex its muscles once in a while in terms of the kind of people that it wants on the leadership. So I think the new chairman was a remnant of the former regime, and I think the new administration wanted someone new in the office, and I think that's why they removed him and put someone else who they want in office. So we're looking forward to see who the new chairman of Safaricom is, and see how the company will be able to perform with this new person on board. Looking forward.
Yeah, I mean, you just touched different issues that are really impacting Safaricom. And now just want to look at the bond market. We're also seeing the economic challenges have really impacted not only the local, but also international investors. But looking at the trend within the bond market, we're seeing investors are buying more of the structured bonds compared to other treasuries within the secondary market. Does this underline the attractiveness of the securities whose returns have even been higher looking at the past year?
I think the bond market is maybe waiting to see what exactly the new government does. So I think the situation in Ghana is impacting how investors in Kenya are treating governments currently. So people used to think that government security is risk-free until now. As you say, in Ghana, what you've seen is the government there maybe forcing investors to take a pay cut, to take a cut in terms of what the money that they expect from them. So I think the investors in Kenya are also looking at what will the government in Kenya do in regard to the bonds that it has outstanding, and some that are due maybe next year and the year after. So I think that's what the investors, I think the bond market investors are trying to digest, trying to see what are the signals from the government on how they want to do business in Kenya. How do they want to deal with bondholders? They've talked of limiting interest rates to around 10%. 10%. Right now they pay around 14%. So most investors in Kenya are being a bit cautious, investing more in the short term rather than in the long-term bonds. And what they're also doing is also to stay a bit away from the bond market until they're able to get or to read the situation in the markets. But also, it was also during the festive period, so it was also a bit difficult to actually assess the actual demand for bonds in the market. There's a very good appetite for infrastructure bonds because people don't get charged taxes; they're tax-free. And I think that's what you've seen this past couple of months. But all in all, it's just the market trying to read what the new government wants to do